let's start. We're on time. People just keep popping in.
All right, so what's Grid? Grid is really just a real estate community with people with various levels of experience. Some of us are licensed agents, some of us are not. Some of us have flipped many houses, some own a property, so like a wide array of real estate professionals. We're not gurus or anything like that. We're really just doing deals and sharing our experiences. Yeah, and our mission, our main mission is really just to share, right? To share the information, share, the knowledge that we get through doing, and help each other grow.
Yep.
This is us. Um, we're both kind of
Go ahead.
licensed for about 20 years. Nick and I met about 15 years ago at Redfin. We were one of the first Redfin agents, and so we have that kind of experience, whether it's prop tech or just regular sales. And at some point, pretty much at the same time, coincidentally, like we got sick of regular real estate and decided that we really want to focus on investing. It's much more fun. It's much more business. It just expands the possibilities for building wealth and just creativity in general. And so that's where we are. That's what we're doing.
Yeah, and also just, again, I think only Fauna is the only one, and Lisa and Mike are the only ones that were here that have learned a little bit about me. So I was born and raised in Montgomery County, didn't leave for 52 years. And then about 6 months ago, my girlfriend and I decided we wanted to move to Charlotte. And for me, being an investor first and an agent second, the decision was easy because I can do my investing business anywhere. I'm still investing in Maryland actively because I have a network of contractors and friends and agents and you name it, they're still there. As I'm starting to build a business down here in North Carolina, if I were solely an agent, moving to North Carolina and having to figure out how to create agent commission income would have been a 6 to 9 month process. And moving down here would have not been an issue, would not have been really viable. So I think everyone here is an investor, not an agent. But I just want to kind of say that to say, like, if the mood strikes you to move across the country, you being an investor, you have that flexibility because it can be done virtually. It doesn't need to be done exactly with your boots on the ground.
Yep.
So the legal stuff. As Karen said, we are investors. We're normal people. We are not accountants or CPAs or attorneys or any of those things that require that kind of licensing. We're not promising anything. We're not guaranteeing anything. All we're doing is providing information. If there's anything that you really want to pursue with any accountant or something like that, you should kind of seek out that advice so you can get it from a qualified person.
And you're being
Uh,
recorded. So be
and
careful.
this is being recorded. So again, once this is all done, we'll be able to process the video. We'll upload it to not only a YouTube channel, but we'll upload it back to the Grid site so that it'll be available for people to kind of rewatch.
All right, so technically, assuming you found a property, which is really the hardest part in investing in real estate, whether you're buying and holding or flipping, the hardest part is to find a deal. So let's say you found a deal. What do you do next? How do you finance the deal, right? And I think that's why most of us are here, is to figure out how to finance the deal. If you have cash, great. You could just put your cash in the deal, do the project, and sell it and make a profit. But that's not always the best thing to do. We know a lot of people that have cash and don't want to put their cash into the investment, right? So you could get home equity stocks, other types of investment. It's not necessarily cash. There are really great opportunities to use your IRA if that's something you want to do in a self-directed IRA. Talk to your accountant about that. I don't know that I could explain that too well. But there are a lot of options. The idea is that not everybody wants to use their own money in the transaction. Nick, do you have anything to add?
Yeah, and I think this is also a sense of, and it's interesting because Denise just commented on wanting to kind of work with someone or a team or something like that. And I think it's perfect because even though these things are assuming like you have the cash, you have the home equity, you have the IRA, that's not necessarily the only way to do it, right? You can kind of talk to somebody else that has the cash and they want to invest. You can talk to somebody else that has a home equity line of credit. One of my consistent sources of funds for my deals is a past client who's got a large line of credit, home equity line of credit. So she funds my deals out of her home equity, and I effectively am repaying her home equity interest plus interest on the deal. So don't just have a narrow thought that if I don't have these things, then I can't do a deal because that couldn't be further from the truth.
Exactly. One way that we actually, fund properties is we will get hard money, and Mike will talk about some hard money loans in a little bit. And then to supplement the hard money, we have friends, family, investors that just help us make up the rest of the money that we need. Just partners. There's so many ways to invest in real estate, and so these investors really just want to put the money in, but they don't want to do the work. So they will put
Mhm.
in, let's say, $100,000, and they get 10% back when we sell the property. So they supplement any funds that we don't have. So technically, you can actually invest in real estate with only investing time and not investing money, right? And that's kind of how we do most of our deals.
Yep.
Um, yeah, go ahead.
No, that was you hit the nail on the head.
Yep. And then there are other loans that you could get. There are home equity lines of credit where you could get, if you have equity in your home, they're at about 7% interest rate, so the interest rate is a lot lower. There's so many ways you can fund a deal. Anything else, Nick?
No, I think it's just again the I love that the people that are here because they're looking to find ways to find money. And and I think it's truly one of those we've talked about it a bunch in other meetings. A, money flows to a good deal. So if
Absolutely.
you've got a good deal, I promise you, if you talk to two or three people, they'll either give you the money or they'll be like, I know someone that's got the money, or it's getting the deal is first and then finding the money. I don't mean to sound flippant, but finding the money is easy once you've got a deal that's worth kind of pursuing.
Yeah. Go ahead, your turn.
My turn. Okay, so I think um traditionally, right, our parents, bought houses or, for the last, however many years, people bought houses by going to a bank and getting a conventional 30-day fixed or a 7-1 arm or some sort of FHA or VA loan because that's all they thought they could do to get financing, which is fine. They work for people that as, for primary residences. Um, but for an investment deal, whether it be for fix and flip or buy and hold, um, their process can be overly stringent. They tend to not want to take on quote unquote riskier loans. So to do so, they require far more down payments and just the scrutiny of yourself personally that is not ideal for investing. The timing is longer. I mean, traditional banks are good for certain things. For investments like fix and flips, probably not the best place that I would be going to look for money.
Yeah, and a lot of these properties that we purchase will probably not even qualify for a traditional loan, so
No.
that's also something to consider. I can tell you from my experience, the first two deals that I purchased to buy and hold were in Pittsburgh. They were $50,000 each, so I was able to kind of dig up 25%. But I was going to do the Burr method, and then the real estate market went flipped, and then interest rates went up, and I couldn't refinance, and so just traditional loans are just not a good idea. Not for this, at least not for, definitely not for flipping.
Yeah. But as we've said, and you probably already have, know what the conclusion is. Private and hard money loans, basically what they are is, as it says, private individuals or very specific companies that lend money to investors. The loans are based more on the deal, the math of the deal, than they are on the credit worthiness of the borrower. Um, so, you are going to get credit checked because, a hard money lender or a private money lender is still going to want to know, are you capable of repaying this loan? But it's less stringent requirements on that.
I think this is a good time for Mike to jump in.
Absolutely.
Can you hear me? How's my microphone working?
We hear
We're
you
good.
well.
Good, good. Well, thank you. Yeah, I appreciate being here. And my name is Mike Royal, and the company I work for is called Finance of America Commercial. When I say commercial, I use the air quotes. We're commercial in the sense that we're a business purpose lender, but all the collateral for our loans are 1 to 4 family residential properties. So it's, very specific to what Karen and Nick are talking about. And then I got to know Karen and Nick back in December of last year, and I've been coming to these meetings monthly, and they've just been great in people exchanging ideas and networking, mentorship, and things like that. It's been terrific. Um, but what we do at Finance of America is exactly that: private hard money type lending. Um, we're not underwriting traditional income. We're not asking for tax returns or W-2s, pay stubs. Um, and we don't even ask for bank statements. So we'll lend to somebody with or without experience. If they have no experience with rehabs, things are a little more stringent, but not crazy stringent. Basically, it affects the amount of money down payment. So a very experienced investor might be coming in with 10% down. Somebody with lower credit score, no experience, might be 20 or 25% down. Um, but I am seeing some things change whereby we're going to have higher loan to value options for borrowers with little or no experience based on credit. But basically, it is credit, experience, and an appraisal. The appraiser is going to go out. They're going to establish an as-is value for the current condition of the property, which we hope supports the purchase price, and what we call an after repair value, which is going to be subject to repairs from a scope of work that the borrower would provide to us and the appraiser. 12-month loans, title is taken in an LLC or corporation name. Um, Loan can pay off anytime. There's no prepayment penalty. Could be around for 3 months for those folks who can get in and out of the properties quickly. Um, Karen referred to the Burr method. We work with a lot of folks that do rehabs and then retain them as rentals. So we do provide long-term financing as well. Rehab is completed. We work on a refinance um, to take out the hard money first position into a 30-year fix based on the property cash flow. Um, I mean, high level, that's what we do. Um, Nick, Karen, or anyone, let me know if you think I missed anything or have any questions.
I think the biggest
Mm-mm.
difference between a hard money loan and just a regular traditional loan is that hard money is asset based. So it's based on the property, on the deal, if it's a good deal or not, and not so much based on your income. So I think that's the best way to think about it, right?
Yeah,
You agree?
and I think kind of dovetailing to what you were talking about earlier, Karen, like where's the money coming from? So we're not measuring the source of the down payment, right? So if you need 15% down and closing costs, um, there could be one individual on the entity, a sole member LLC, but money could be coming from, cousin Ed, right? And we don't really know or care. Um, Whereas in traditional lending, if they see a large deposit, the lender sees a large deposit, they want it sourced, they want an explanation. We don't do any of that, as Karen was saying. We're asset-based lender,
Mm.
and that's how we do things.
Yeah, because if the down payment doesn't reach the settlement table at the end, the deal just doesn't close.
That's right.
Yeah.
Right. And I think something else that people, that I've had experience with Mike and or other, really good hard money lenders is treat them like a partner in the deal to a degree, right? On more than one occasion, as I've been evaluating a deal, I've actually buzzed Mike and been like, "Hey, here's a deal I'm doing. Here's what I think the ARV is. Here's what I think the scope of work is. Um, can you run some numbers for me so that I can understand what my monthly payment's going to be so I can calculate that. So I'm evaluating the deal properly. Um, and within reason, he gets back to me and tells me what those numbers are. And now I was like, okay, great. After he's done it a couple times, I know what Mike's numbers are, and I just have them in a spreadsheet, and I can move forward without having to kind of bother him with every deal I'm evaluating. But that's one of the things that I've loved about having Mike in my pocket as a possible funding source. Um, Look at that. We've already kind of, Mike, even without the prompting, you were able to kind of literally touch every bullet point here. Um, One thing that I don't know if you mentioned it, you kind of mentioned it in passing and you said, it has to be like an entity. Um, can you explain if, like, can I buy a property using a hard money loan personally, or does it have to be in an LLC?
So our company's position is that we title in an ent we require title in an entity. And I believe we do that to maintain our business purpose status. There are lenders in my same space who will allow title as an individual, but we try to keep that distinction so then we're not subject to the
Mm,
rules under TRID, which folks may not know what that is, but that's like, a big disclosure process that, in many respects slows things down and is
mhm.
time-consuming and cumbersome. So it's a long answer to say that we at Finance of America require title in an entity.
And most do for that very reason. But that was just for the people that are newer in the group. If you're thinking of getting to do a deal in the next 30, 45, 50, 60 days, probably worth filing an LLC. In the state of Maryland, you can do it on any of the legal Zooms or any of those places. Um, but again, not legal advice, just a suggestion.
Yeah, and I'll add to that because we see this all the time. So here we are in the DMV, right? We got Maryland, DC, Virginia, all very close together. Um, Again, just a suggestion, as Nick was saying, I'd probably file that LLC in the state you feel like you're going to be the most active. So let's say it's
Mhm.
Maryland, but then you ultimately find a Virginia property and you want to use the same entity. That's fine. And then there's something called a foreign entity registration you've got to get in Virginia in that example. Not a difficult thing, but I would focus more on the state you think you'll be more active in to establish that entity.
100%. I actually remember a deal. This was before I was an investor, but I remember I was an agent doing a deal with somebody, and the person had a Maryland-based LLC or a DC-based LLC, and they were flipping a house in Maryland. And because it was not a Maryland-based entity, when they went to sell the property, Maryland was going to withhold 8.5% of the gross of the sale of the house to ensure that that entity filed taxes. So that person scrambled real quick and filed a Maryland-based LLC, and then did a quit claim deed or did something to avoid that Maryland withholding tax.
Wow.
And that's something you can't avoid it. So, and it's not 8% of the profit; it was 8% of the gross.
Wow. That's crazy.
Big.
Yeah.
Wow.
So anyway,
Yeah. So
but those
no,
are the
no.
things, right? That was something that I didn't learn until I was 15 years, 16 years in the business.
Yeah,
But
I didn't know that until now. So
Yeah. And then, I guess something I really didn't touch on is when we talk about these loans, the loans are really in component parts, two components. What we call the initial loan amount, which is what we fund at acquisition. So again, say you're putting 15% down, we fund 85% of it. And then let's say your budget for repairs is 80,000. So we call that the construction holdback, right? So That's out there for draws, right? You start the work, say you do $10,000 in repairs, you put in for a draw, the work that you've done gets validated or verified, and then we wire you $10,000, and that adds to your balance, and then your payment goes up commensurately. So you're not paying interest on that holdback until you start taking the draws. So just kind of a distinction. Loans are a little different than conventional loans where it's all at the table, whereas, this is a portion at the table for acquisition and then pieces of it through draws as the project is moving forward and repairs are made.
Yeah. Awesome.
So no cash. So a lot of people want to invest in real estate, but they don't have the cash. And yeah, I decided one day that I was going to look into the different strategies that people use to invest in real estate without having cash. Like, what are you investing if it's not money? So you can invest time. And if you have the time to invest, there are ways to actually flip, wholesale, do deals without putting any of your money into it. I had one deal that I spent $250 on. That's it, out of pocket. So there are ways to do, if you wholesale, you don't even spend that. So there are ways to invest in real estate without spending any money or any of your own money, right? And for that, you need to
Hmm.
partner. There's a lot of ways to do it. I actually did a little research. If you want, I'll send you the research. It breaks down like 35 industry leaders and how they train and teach to invest without a penny, right? So there are different strategies. I just wanted to see that I'm not missing anything. Um, I wouldn't do any of, or not any, but most of these strategies. The idea is there's so many ways to invest. The idea is to choose one way and to focus on that and get good at it and then go on to the next one. But there are definitely ways to do it.
Hmm.
Anything to add, Nick?
No, I mean, I think I've kind of said it already. Like I have my primary source is a person that was actually a past real estate client of mine. I helped her buy a house, sell a house. She got my newsletters that I wrote, saw that I was starting to do some investing, and one day saw that I had a client that was looking for some cash, and she called me and said, "How much do you need?" And I said, "Well, how much do you have to give?" Um, and she told me, and I said, "Well, that's enough." And I did a deal with her, and I returned her 10% on her money in like a week. It was a very specific deal. Um, and a week after she got her money back plus 10%, she said, "When can we do that again?" So I brought her another deal and she funded another deal for me. And then I brought her another deal and she funded another deal for me. And these were all, she was funding my down payment. Like Mike was saying, if you need the 15% cash to close. So she was funding my 15%. So I was getting most of my funds from a lender. Um, and she was funding my down
What's a
payment.
cucumber?
Hey, Usman, can you mute yourself?
Oh yeah, sorry about that.
That's okay. Um, so, um, so I kept kind of, borrowing money, repaying her on time, et cetera, et cetera. And now she's told me that she's actually extended her line of credit and she's willing to do bigger deals. And the most recent deal I'm doing, she funded everything. She funded the whole deal 100%. So um, it was a little bit of baby steps because I had to kind of create some trust with her. But now it's to the point where if the math works, I send her the deal and I say I'm going to get hard money for this and I need this and this is what the deal looks like. And she just says, "Okay, when do you need me to send you the money?" And it took time, but again, just giving you examples of if you think you need like $80,000 before you can consider doing your first deal, um, you don't.
For sure. And to that point, like she heard about you through an email that you wrote, like your email or a post.
Yeah, yeah,
So
I do.
go
Yeah,
ahead.
I read an email newsletter a couple times a week, kind of documenting my kind of transition from agent life to investor life. And I talk about the good, the bad, the ugly. My successes, my mistakes, and everything like that. And yeah, she just, I didn't know if anyone was reading them because no one ever responds. But one day she called, so clearly she was reading my stuff.
You
Um,
never know who's watching, right? And
right.
that's, the point I'm trying to make is I always tell the people I coach to post about what they're doing.
Hmm.
Um,
Right.
and that's how I get my private money lenders. People see what I do. I share it all over the place on social media. And they see that I invest. They see my before and afters. They see all the stuff that I post. And then when I reach out, I'm like, hey, do you want to invest? You want to partner with me? They're like, heck yeah, because they see I do it all the time.
Hmm.
Up to the last two deals that I've done, I didn't take any loan. It's all private money investors, right? So tell people
Right.
what you're doing. Tell people what you're doing, and they will see you as a professional.
Yeah, and I think to that point about posting, I remember a deal you posted probably last fall, maybe a year ago, something like that, where you said, "Hey, I bought this place. I'm going to do it as a not as a complete charity thing, but I'm going to do this, and a portion of the proceeds I'm going to donate to charity." And you had people coming out the woodworks to help you
Yeah.
with the demo and the clean out and even painting and like some of the smaller things, which saved you money on the rehab, thing. So your profit margin was bigger. Because your profit margin was bigger, you had a bigger donation
Yes.
to the charity that you were going to do it to.
Yeah.
And that's just like talk about building a community. Like I'm sure those people were appreciative that you created an opportunity for them to get engaged in a process that was going to do good for a lot of people.
Yeah. And that just kind of provided more money than any one of them could have provided on their own, right? They couldn't donate $18,000 we made out of it to donate to a charity, and they couldn't donate even their part of the $18,000 into that. So
Yeah,
that was a cool opportunity. We should do that again.
we should do that again. Indeed.
Um, okay, what is this?
Uh, I think we kind of rolled through that.
All right, cool.
We're
Oh,
trying to cash is
that's
higher.
it.
Well, so that's the end.
Yeah, that's
That's
like the
all, folks.
slide part.
Right. Um, so yeah, so at this point, we've kind of rolled through the content. It's just after 6. Karen and I are happy to stay on for a good bit of time if what we've kind of discussed or mentioned kind of piqued a question. Um, so yeah, I guess we can open it up to questions and or as it said, aha moments or just let's love to hear what you guys have to say.
This
Thanks
definitely
for
goes faster on Zoom. Go
yeah,
ahead.
thanks for holding this. I think it's really helpful for me. So basically, I'm doing a lot of flip project before. I use the private money and also my own money. But now I feel like still because I'm actually I have a small wholesale team. Basically, just the purpose is really just to find deals for myself. So sometimes I can find a very good deals, which I still need money. So my question is a few. Basically, the first question is, so if I use hard money, how fast I can get that money? Because sometimes when I do wholesale, the sellers want to close in maybe 2 weeks to 4 weeks. So
Yeah.
that time is very critical for me. So how long it takes to get the hard money?
That's why hard money is like an
Hey,
additional tool for us, right?
right.
If everything is set and the hard money lender has all of your information and they're just ready to give you the money, then as long as the deal works, they can fund it usually in 2 weeks.
They have to
Yeah.
go through the appraisal and the evaluation process, right?
Mm,
It's like in the
Yeah.
traditional.
it
How long that takes?
it depends.
Yeah.
Jay, there's, whenever people ask me questions about real estate, whether they're
Uh,
agents or clients or whoever, my answer always starts with it depends.
Okay.
Um, I think the standard, if you ask Mike, and I'll let Mike answer for himself, but Mike is probably going to say, comfortably give me 2 weeks
Okay.
to
Two
run the
weeks
process
is
from beginning to
perfect.
end.
Yeah, it's like
Yeah,
perfect. 2 weeks.
but I also know a hard money guy, and and this is why I know about it. He posts on Facebook. He says he funded a deal in 48 hours. Right. It might have been from somebody he's loaned money to repeatedly, so
Mhm.
he knows them and he didn't have to fully underwrite them. But there are some people that can fund a deal super quick. A private person will probably be able to fund it faster than a hard money person because the private person doesn't have full underwriting situation that has to be done. Um, so that's why it goes back to what we were saying. I love Mike, but sometimes like if I had a deal and I needed to close it on Monday, Mike probably can't do it, but this other guy can.
He may
So
might
that's why it's
be
good to
able to
have
do it. He may be
multiple
able
people.
to do
I
it.
don't
It
know. I
depends.
don't want to throw Mike under the bus. Can
Yeah.
you do it?
So,
Can you close a deal on Monday?
so it depends. So if you're willing to pay for a rush appraisal, which, it's $600 in our world for a rush, I have to, today's Wednesday, Monday, would I commit, if you had a lot of money at risk, I would say no. Like I wouldn't do that. But
Right.
7 days, calendar days, like next Wednesday, I'd say yeah. Like, and I've done that. Without a rush, like to kind of start where the question came in, comfortably 2 to 3 weeks without a rush. Like
Yeah.
all the time, 2 to 3 weeks without a rush appraisal, a week with a rush appraisal.
And also don't
Okay,
forget
sounds
that the
good.
title has to do their part too, right? So it's not just
Right.
the
Of
lender.
course, yes.
There are other, you're right, Karen. So thank you. So because,
Yes, that's right.
so we've got an insurance agent who's got to be doing their job. We do have a preferred insurance provider, but we don't force that on anybody, but we'll get you a quote. So I'd say about 50% of my transactions close with our preferred insurer, 50% with an outside agent, but we need that information. We need the title information. If we're reviewing your track record for the first time, sometimes let's say you closed a property in a different entity than the one you're using for the subject, we might ask for a settlement statement to tie that property to you from an experience standpoint. But the good news is once we validate the experience on the first transaction, that's done. So transaction
All right.
2, 3, 4, we don't need to do that anymore. So,
Sounds
but
good.
but thank you, Karen, for noting there are other
Yeah,
folks with
Yes.
not just on
responsibility.
lending. Yeah.
Yeah. Right.
But with that said, I did recently just learn that title, if they really want to, they can do their thing in 3 days, right?
Yeah.
Like, so that whole title thing takes 10 days is really not a thing.
Yeah, there are some really good ones out there that
Yeah.
will hustle. Yeah.
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 And also the second question actually, so for the acquisition part, so you say you can fund up to, 870, 875, whatever the amount. So are you against the purchase price or the appraisal price? Because, sometimes, for example, sometimes I can buy off-market property, which give you an example, I just bought one, which appraisal come back, 250, but I get a contract with the seller with 150. So if I buy with 150, so when you funding this one, so the 80% is against the 250 or 150?
150.
Okay, the purchase price.
Yeah, so you're talking about 250 as the as is.
Appraisal. Yeah.
Right, as is. Yeah, we're going to be the lower of that purchase price or the
Okay.
as is value.
That's
Yeah.
that's fine. And also, how do you evaluate the construction part of the loan? For example, there's two part, right? The first part is actually acquisition part, and
Yep.
also the renovation part. How do you evaluate? Like how much you evaluate? Give me that part. Like for example, if you evaluate this for $80,000 renovation or $6,000, it's kind of I don't know. How do you evaluate the scope of the work? Basically,
Yeah,
about that.
so you just said the word. So a loan comes in and we send out a link, which is our digital scope of work. So
Okay.
you may have told me when you're bringing it in, you say, Mike, I'm paying 300, I'm putting 80 into it, and I think it's going to be worth 550.
Yeah.
So we're going to send you a digital scope of work. You'll open it up and you'll spread that 80,000 among the budget line items in there.
Okay.
That document goes to the appraiser, and that's what he or she uses as the basis for establishing an after repair value.
Okay.
Am I answering the question?
Yeah, that's
Yeah.
good. And then my third question, which is my last question, sorry about that. So basically, if I can do, for example, 3 projects at the same time, are you be able to fund that, or you have to do 1 project at a time?
No, we can take them simultaneously.
Okay,
I
that's
mean,
great.
especially
Yeah.
you've done them, so with experience. I actually have two gentlemen in New Jersey now who had zero experience. Right now they have two coming in at the same time. But so it's not uncommon, but certainly for folks that have a track record, we see multiples going pretty regularly. Yeah.
Okay. So I really want to start this because right now I'm running three projects at the same time, but I have another project come in supposedly within 2 weeks, and then we're gonna sign the contract. So I want to start the evaluation process with you guys, so you guys can,
Hey,
evaluate
Jay,
me.
that's awesome news. What I'm going to do, I'll definitely connect you and Mike after
Right.
the meeting's over so you
Yeah, of
can
course.
kind of
Yeah.
dive down that rabbit hole.
Mm,
Totally love the questions. It's definitely bringing up lots of great information.
mm.
Um, someone just asked about how do we get deals, right? This, we went on the assumption that you already found a deal and you've already evaluated it and you're looking for money. Um, finding deals as a whole can be ugly animal. Auctions specifically, personally, I don't kind of pursue auctions, but a member of our group that's been to a couple meetings, that's the only way he buys properties is at auction. He will go and kind of look at the ARV and do. I think he says he does $100 a square foot for his scope of work. So if it's a 2,000 square foot property, he estimates $200,000 for a renovation, and then he does his math. And if the auction, once the auction hits a specific number over his budget, he just stops bidding, um, because he's buying properties sight unseen. So that's how he's doing it. But this was also a great question because Karen is in the middle of a project that a wholesaler won a property at auction and assigned her the contract.
Yep, sight
So
unseen, and it's actually like 3, 4 blocks away, so I could drive around and take a look at it. I couldn't get too close because there were squatters in there, but I could just kind of take a look at it. It looked okay. Not exactly a wholesaler. He's actually the guy that's doing the renovation for me, but he does this kind of stuff. And the numbers were great, right? So there's a court process involved, and it takes time to close, and we finally closed. And we started kind of tearing down whatever needs to be torn down. And I thought we were just going to build an addition to what's there. But every time we opened a piece of the property, it was rotted. So we had to take it down. And then the next piece, and the next piece, and the next piece. And it was just really badly built. The guy did a lot himself. He worked at Home Depot, and so he thought that he knew how to build. And what we have left of that property right now is a staircase. That's it. There are no walls. There's a floor and a staircase, and even the floor needs to be replaced. So it's going to be
yeah,
a rebuild, right? Yeah, just a new build, actually. So it's
yeah,
no longer just a flip. It's a tear down and a new build, and that's a totally different project than what I started out with. So I would not recommend buying a house sight unseen, regardless. And I would definitely not recommend starting with auctions. You just need a lot more experience to go to.
right. And then one little piece that Karen, as she was talking, because we had this conversation yesterday, and she told me about it, and my jaw was dropping as she was telling me what was going on. And I said, "Well, was there at least a steel I-beam holding up the foundation?" And she said, "Nope. The guy used nailed like three 2x4s together to create the
The beam in the
structure."
base,
The entire structure of the house was sitting on three nailed together 2x4s. Like, oh dear God.
yes,
Um,
exactly.
so yeah.
So we're
Um,
putting in a steel I-beam. I
yes,
should
you are.
be
I'm sure
there.
you are. Right. So it's actually interesting because it's kind of to piggyback on the end of that conversation about not using auctions, maybe as a thing. Denise also asked about like, what do we advise when you got more time than money? Um, this will actually go back. We've done this conversation. We've had this meeting on how do you find the deals, and there's a situation of you have time or money. What do you have more of? And if you have more time than money, then you have to engage in the activities that are less costly and you can do in your own time. That would be stuff like we call it driving for dollars. So drive around town, look for properties that, are seemingly in disrepair, find the phone number of the owner of the property, call them. Um, that's one
Network.
way to do it. Networking, being here is great. Like it could be, um, networking in here, getting on a buyer's list, going and talking to a wholesaler and kind of being a bird dog for a wholesaler, or an investor, or getting in the MLS and kind of searching for properties that are pre-foreclosure. I mean, there's all kinds of things that you can think about that would be more time intensive than money intensive. Um, and here's something that I'm actually doing more and more of these days. I ask ChatGPT all the time. So I think if you were to even go onto GPT and say, I'm a new investor, I have more time than money, I live in Maryland, what are some ways that I can get started? And it will give you very, very good information. Um, that would kind of be a little bit of a first step. There's a lot of bits and pieces and rabbit trails with each of those points to kind of follow. And if you want, either Karen or I later, I mean, I won't offer Karen's time, but I'll offer my time.
Oh,
We
no,
can
you
have a
can
more
offer my
in-depth
time.
conversation later. Yeah.
Yeah, I'm happy to talk to.
Okay.
I will tell you though, that's the hardest part, right? Finding the properties is the hardest part. Um, I do a training, and part of what I teach is that. And I will tell you that people don't do the work, right? So if you are serious, then decide what you're doing and do it, right? But people do all these trainings and then they just don't end up doing the work. Then, don't waste your time or your money, right? But if you're
Right.
serious, find one of these strategies on getting deals and do it. Nick and I
Definitely.
started out by buying leads. We would just buy, buy, buy. I kind of got tired of buying leads. It's a lot of money, and just at some point the quality of the leads went down, and I just got tired. So I started networking. The three deals I'm working on right now are all from networking. So find your network, right? Find people who are constantly involved in real estate agents. What I don't know what you do, but a lot of the people like that I trained are somehow involved in real estate, so they know real estate people, people who are constantly in houses, whether it's contractors or landscapers or whatever. They'll bird dog for you. They'll let you know, like, there's a shitty looking house over there. You may want to reach out. So
Yeah.
it's just learn how to network and tell people what you do. I actually
Okay.
have an awesome GPT if you want to use it to post on social media. It'll help you write like 90 social media posts on just the fact that you're looking for properties. And if you want,
Hmm.
I'll send it to you.
Okay. Yeah, please
Yeah.
do.
Sure.
Yeah. I
And if
appreciate, go ahead.
no, I was gonna say, and if anybody needs me, I'm ready to help out.
That's
Awesome.
awesome. Like it's almost like, to some degree, you could be like an intern, right? You could help with somebody kind of starting something or, do a little bit of admin work and you learn almost by osmosis, like, and, you
Exactly.
kind of just by being around it, you'll learn the information. Um, and then it's interesting because your question, I think, prompted Prince to ask a question that's again like another follow-up to it. Um, the difference between, and here's another difference, and Mike might correct me. The difference between traditional lending and hard money lending, with a traditional lender, they will likely do a partial underwriting of your of being qualified and getting a loan letter just based on your credit and your income and those types of things. And then they'll say, okay, great. Hey, Prince, you're approved up to a purchase of $450,000. With the hard money loans, it doesn't work that way because the loan is based more on the asset and the deal, right? So it's if you're buying a house that's worth $500,000 and it needs $50,000 worth of work, and you're going to buy it for $300,000, like that's what Mike wants to see so that he can then qualify the loan based on the specifics of the deal, not the specific. Did I kind of get that right, Mike?
Yeah, yeah, you did. I will say, we do soft credit pools. I kind of like to get that out of the way, just to make sure, we're not dealing with anything that, typically people know what their credit looks like, right? They know, hey,
Right.
I'm high 700s, I'm good. But if someone might be, kind of borderline, I like to pull that. But to your point, yeah,
Hmm.
like we're looking at, okay, I want to buy it at this. This is what I want to put into it. My projection on the ARV is that, and that's what we're looking at. And then we're kind of from there, we're like, okay, what's the experience level? Does it fit the
Right.
box? Does that project fit the box of someone with light or no experience? Yes or no? And then, yeah, but that's it. Yeah, in a nutshell, you're right.
Right.
Yeah.
And then
Well,
just
and
one
then
more
also,
point. They say that to invest in real estate, you need two out of the three, right? You need credit, money, or knowledge, right? So you need two out of the three. Knowledge you can all get, right? You just go and learn. It's online, it's everywhere. There are books that just go and learn it, right? So knowledge you all have. And if you don't have credit or money, you can partner with somebody. And many times there will be like a JV where one person brings the money and the credit even, and the other person does the work because you have the knowledge, right? And then you could split 50-50, and that's just a good way to start, right? So
yep.
it's what look for a partner that has what you're missing.
Well, that's you literally stole the words out of my mouth. What I was going to say was the other piece was if you don't have, like, if you only have one of the three, then go find somebody that has the second or the third piece that you need, right? You could borrow experience, right? So let's just say Denise finds a killer deal tomorrow and she goes to Mike and says, and he's like, well, what's your experience? And she goes, well, I have none. Well, but if you bring Karen or I into the deal with you, well, now you're borrowing our experience because we're going to be partners with you on the deal. And now Mike is going to evaluate us together as the borrower and not just you. And, if you just need the credibility, we could be like, fine, you can borrow my credibility. And the cost of borrowing my credibility is going to be X, like a small little something. It doesn't have to be a portion of the deal. So there's again, it depends. There's all kinds of ways to kind of skin that cat. And for cat lovers, I apologize for that kind of pun.
I already saw Lisa Tucker's face.
I know. I knew. I was looking right at her when I said that. So yeah.
Leo, you
Anyway,
mentioned that
so
your wife is a real estate agent. That's like just such a great combination, right? Because what we do is we go in, we talk to sellers, and we can offer them a bunch of different options, right? So we'll get the deal no matter what, we convert a lot more because we can help them list just like a real estate agent, and we can help them sell fast with a cash offer, and we can help them list and have a backup offer. And there's just like a whole range of things that we can offer them because we're the investor and the agent. And if we can't get a flip from them, then we'll get a listing from them. So it's a great combination, like you being a GC, an investor, and her being an agent.
yeah, and then there's another thing going back to those that say they have time and no money. As Karen said, one of the ways, and this is just the kind of another, it's a bit more of a moderate to advanced strategy. Um, but if you don't have the cash to buy leads, there's probably an investor out there that has the money to acquire leads, but they don't have the time. So, like with the system that Karen and I work with, that's set up with automations and whatnot, um, you could have the investor buy the leads. You do all the work to sort, sift, vet, evaluate, et cetera, et cetera. And then you bring the deal back to the investor and say, here's the deal I sourced for you. Um, do you want the deal? And if they want the deal, they pay you a fee for the deal. And that's how you kind of can make some money. If they don't want the deal, but you've sourced a really good deal, well, then you can go wholesale the deal to somebody else and then, pay that investor a portion of the wholesale fee because they're the one that sourced the deal. Or if you do it yourself, pay them a portion. Like there's ways that you could do that. That again is kind of, like I said, a more like intermediate or advanced step, but that's something that you could grow into as well.
To me, the exciting thing is that there's just so much opportunity, right? Like I didn't even think that my business would expand in that way. Just, whatever comes, it's like how to kind of break the details apart and figure out what you can do with it.
Yeah.
There's just so much
Well,
opportunity.
and I think we kind of had this little bit before we started recording as people were starting to come on. Again, yesterday, Karen and I were talking about, just a variety of things. And I was kind of describing two kind of humdinger deals that have gone sideways or whatever. And she and her mouth was dropped, her jaw dropped, and then my jaw dropped with her thing. And we said, like, 3, 4 years ago when we first started, either one of those deals would have made our head spin and we would have like flipped out and kind of probably run away, et cetera, et cetera. But now with a little bit of experience, we still had an emotional response to the bad, to the bad news we got. But we waited, we kind of paused, we sat back, we said, okay, this is just a problem. How do I fix this problem?
I'm
And
not gonna
then
lie, I lost a night of sleep when I just saw that staircase. I did lose a night of sleep.
right. Well, for those, if I didn't say this already, I'll share mine just to kind of give people an idea of what happened, with one thing. I bought a property in March. I did a renovation. It only took like 2 or 3 weeks, got it on the market quickly, found a buyer. Everything went fine. We're supposed to close on May 27th or May 23rd, that Friday right before Memorial Day. And the Tuesday prior, got notice from the buyer's lender that the association was on Fannie Mae's ineligible list. And they were on the ineligible list because the reserve study had shown that roofs in the complex needed to be repaired. So Fannie said, we're not lending anything in this project. So I was like, oh crap. And it wasn't until about 4 days later that I thought, well, I can only sell to a cash buyer because a cash buyer is not going to really worry about Fannie Mae. Or I could do seller financing. And that's where I came up with the idea for seller financing. And I did some research. I called somebody who I know does, kind of private notes. He educated me a little bit. Lo and behold, I had a buyer call me yesterday inquiring about doing VA financing on the property, and I told him we couldn't do VA financing because of this Fannie Mae situation, but I'd be willing to seller finance it. And he said, well, what are those terms? And I told him what the terms were, and he said, how much money would I need to bring to the table? And I told him, and he said, sounds good, let's do it. And I was like, okay. So I had to scramble and figure out how do I write a contract with seller financing as part of the contract. I found an underwriter that will underwrite the loan for me so that the loan can be properly underwritten. And we are going to do seller financing. And then once the loan is serviced for a few months, I'm going to then sell that note on the secondary market because I don't want to carry a note on this property for the next 30 years. I want my cash back. And the only way I can get my cash back is to sell the note. And little did I know that the guy that gave me the advice said, with the way you're describing this deal, once the note is about 6 months old, I'll buy the note from you. And or you can take this onto a particular secondary market and you'll get it sold in a matter of days. So on day one, I was like, mother blank, I'm going to get stuck with this property forever. The private money that I have on it, I can't repay her because of the situation. It was like fire. It was just not good. And now here we are a week later where I've talked to my private money lender. She's on board with the process. And hopefully in 2 weeks, knock on wood, I will have the property sold and a private note on the property. So, it's just you never know, right? You guys are sitting here today probably thinking, "Oh dear Lord, I wouldn't even know what to do." And that was me 4 years ago. But now here I am having that experience to kind of say like, and honestly, I kind of like it. When stuff goes sideways, it's kind of like, great, now I get to learn something new. And it's a little bit of a rush. So I don't want all my deals to be like that, but to get one every now and then is not a bad thing.
The lesson from this one is no condos.
No condos. And that was on me. Another lesson is, because I was using private money, I didn't go get the condo questionnaire completed. So that's on me too, because I didn't learn that problem before I bought the property. Um, if I had learned that, I probably would have either I would have lowered my purchase price or I would have canceled the deal. I just wouldn't have gotten into it. Um, but I learned. So now I know people that are willing to do seller financing or finance private notes. So I'm looking at that as a silver lining.
Hey Nick, so I think I replied to your email regarding this. I think
Yeah,
let's say,
yeah,
did you notice there are some other condos, other units on for sale, in the same association?
yes, there are.
And
And
how
that and
did
that's what
they?
was so confusing. I
Yeah.
guess none of them realized it, or they were all active. So the solds were all sold in like November, December. So I mean, that could be the thing. It could have been, but those could have been bought with seller fine or with private money. So they were closing and it didn't matter, or they were closing with cash. So it's just, again, a mistake, not a mistake I made, but something that I didn't pay attention to. And the next time I evaluate a deal, I will pay attention to it.
Mm.
But
So
yes, I
if it's
appreciate that you read my emails.
yeah, so if it's a, let's say there's like a unit that was sold within a month, that should, alert you, right? Like, hey, maybe that would remind you there's no problem with the finance. I don't know.
Maybe, and it's hard to say also. I mean, it could be that an association, right, can go ineligible if it has too many delinquencies, and that's just a matter of timing, right? It could be, today eligible, but tomorrow or in 3 weeks, because enough people have not paid their dues, the ratio is now too high, and now it's not eligible. So there are some things that you can't just kind of take for granted because um, some of those factors are calculated on a day-to-day basis.
Yeah, and I think they also have to have a certain amount or percentage in reserves in their budget for the HOA or the
Mhm.
condo, which, like you say, that's could be a moving target, right? It could be
Right.
sufficient today and not sufficient tomorrow, and you can't know that's coming. So
Right,
It's
right.
also a
So,
matter of like how many investors own how many units in the
mhm,
HOA or the
yep,
condo association. So that wouldn't be a reason for them not to insure it, but that would limit your buyer pool to like only
right.
primary residents and you couldn't sell it to investors. So you don't want to, purchase something that will limit in any way, who you can sell it to. So
And that's why Karen simply says, don't buy condos.
just no condos. And
Just no condos.
I've run into this situation with regular buyers, buyers that just wanted to buy a condo. There's a big condo area in Germantown that one of the like 2, 3 years ago, one of the units exploded, right? And the building collapsed. So for like 2, 3 years afterwards, they wouldn't insure the area. They just didn't insure the whole condo association. So nobody could buy there with a regular loan. And people couldn't move. They could only sell for cash. It reduced the value of the condo.
Mhm.
So I know this happens. Back then it was just a traditional lender that was lending to the buyer, and they just couldn't insure it, so they wouldn't give the loan, right? So
Right.
if you have a traditional lender that you could reach out to and say, "Hey, is this condo like warrantable?" They can check for you.
Yeah. Prince, also another thought would be, I see Karen kind of said it depends, right? It depends. Um, I would say maybe start with like, your local area, right? Within 20 minutes, a 20-minute drive of your house, right? Create a circle. And because one of the benefits, one of the things you have to develop is evaluating value. And you'll know the value of the homes closest to you faster than, like, I used to live in Montgomery County. Now, granted, I sold real estate all over Montgomery, Howard, PG, wherever. So I was able to kind of accurately evaluate the after repair value of homes. But if, being new to this, I would say start with where you live. Um, there are you can either kind of tag team with a real estate agent and say, help them they could probably start to help you figure out, well, what is market value for homes, partner with an investor like Karen, myself, or anybody else, that you could kind of find and start to learn how to do that. But don't like go an hour away to start comping homes because the value might be better. Just my thought, the way I would do it. Like even when I lived in Montgomery County and I could do a deal in Anne Arundel, I still was only looking for deals in Montgomery and Frederick because that was like my backyard and that's what I knew like the back of my hand. Um,
So I'm
so
I'm actually so glad you brought up Baltimore, okay? Because Baltimore City has all these like special properties that have like $3,000 townhomes, and then you can renovate them and sell them. But if you look online and like look on Redfin, right, and just check on address and then scroll down and see that properties, first of all, don't sell for much higher. So there's not much value you can add to these properties. But also they're just not selling. Like there's so many of these properties around that are on the market and people are not buying them. And then and even if they are selling, then there's not much of a spread between what you can buy and what you can sell it at. But just and I'm going to tell you now, like don't don't try Baltimore County. I mean Baltimore City.
right.
Just don't.
And that's what's yeah, he actually, like, you commented like that's where it's a low price. It's a low price for a reason.
Yeah.
And also if you've been paying attention, there's and I've seen this on a couple of Facebook groups, Maryland investor Facebook groups. Um, there's several people on Instagram who are breaking into homes that are for sale or for rent that are vacant, changing the locks and offering the properties for rent to random people and basically taking like a $1,500 fee to have people move in with fake leases. And now the owner of the property has a squatter in the property and they have to go through the eviction process. Right. So, like, not to say that can't happen anywhere, but it's happening a lot in Baltimore. So, like, why would you actively want to jump into a market that has just problem after problem after problem? There are too many deals out there in other parts of the state that are probably better for you.
Yeah. And
That's just my opinion.
finding a low price area is not a solution to not having the money, right? Find the money, find a partner who has the money and get the knowledge, right? Find a partner who has the money and then do the deal that way.
Yeah,
And it's not to say like go to Potomac and buy $1 million properties, like don't do that, but find a good, comfortable middle ground and just make the numbers work.
yeah. And then another way you could probably do this, and I don't know all the websites that are out there, but there are some good investor-based websites that you can kind of get MLS data from, so you don't need to have direct access into the MLS. Um, and I'll put like one is called Privy, and I'm putting it in the chat. That's a website. There's PropStream is one, PropWire is another. I think there are a couple others, but those are the type of sites that will give you kind of pull together public record information, MLS sale data, And that way you can really start to look at really evaluating a deal. You can see who's buying properties, so you can kind of see if like one or like if does one particular person own multiple properties. Well, might not be a bad idea to go find that person and see what kind of properties they're looking for and bird dog for that property for that person. Um, but those are some ways they're going to cost something. But if you don't have access to the MLS because you're an agent, you're going to need to pay for access in some way. But these are like $50 a month or something like that, $100 a month. But if it helps you find a
PropWire is
deal that's
much
good,
cheaper. PropWire is like $20 depending on how many leads you're asking for. So it's really cheap.
right? Okay.
And Redfin,
Um,
so if you're asking about areas, right? You asked about neighborhoods, what areas. Redfin has wonderful information just about areas in general, like, have prices been going up, market trends, all kinds of things like that that are specific to an area. So it's totally worth learning how to use the data in Redfin, not just the listing information, but the actual data.
right. I'm actually gonna find there's I'm opening a browser on the side to try to find a site and I'll bring it up when I find it. But there's part of Redfin's blog has a data center that I mean, if you're into metrics and data and graphs and that kind of like evaluating information, it's like you'll have a wonderful time here. But I have to find it. And when I find it, I'll post it in the chat. Um, what else? We're going on like 6:45. My dogs are kind of scrambling down there, so I can hear them growling and fighting on the couches. So I'm gonna have to jump off in a few minutes.
এখন না
But also, like Karen and I provided our contact information in the chat. So if you are looking, if you need anything, if you're not interested in asking a question in this open forum, you can kind of certainly reach out to us after the fact.
So I want to answer Prince's question because she's keeps saying that she wants to pay off her debt. First, you need to make sure what it's good debt, what it's bad debt. So what is the interest on your mortgage? If it's something like 4 or 5, it's pretty normal right now. I would recommend you don't pay it off as soon as possible. Anyway, you guys, Nick and Karen can say something to it.
Uh,
It's not bad to have debt, by the way. I mean, it's not a bad thing as far as financing goes. It's not, it doesn't deter. That's not what the issue is going to be for getting financing.
Um, I think this is a similar question to the one that I think it was Evelyn asked, or not Evelyn, somebody else asked this question, chicken or the egg? Do I get the financing set up first or do I get the deal first? I will say 99 times out of 100, find the deal first and then, reach out to somebody here and we'll put you in touch with Mike or one of the other hard money people we have, or, we'll get you the financing in a matter of a couple hours or a day or two, but find the deal first.
So I said the opposite here. I posted.
Well, you can start talking to the lender, but you're
Yes,
not going to get a loan until you have a deal.
of course. But
So,
get approved,
yeah.
right? Like so that you can actually say I can close in 2 weeks. Like have all your ducks in a row, have the lender ready to say yes, we can send an appraisal and we can close in 2 weeks, right? It's just another tool for you to be able to talk to a seller and say, yeah, we can buy this house in 2 weeks.
So yeah, Prince, it sounds like we could have a longer conversation and we're not credit people. But can certainly provide a few insights into how you can kind of start to solve your problem. Um, but here's that Redfin site I was talking about. It's right in here. It's called their data center. And if you go into here, I mean, you can go deep, right? Like you can go into um, county areas and then say like, um, like Howard County, Maryland. So now all of a sudden in Howard County, Maryland, boom, new listings. So you can see kind of the trends for listings, pending sales, how many homes are sold, what's the list price. Um, See like in 2022 versus 2025, right? So the median list price has actually gone down over the last couple of months. What is the sale price done? But interestingly, the sales price is going up. So like this is a way like if you really want to geek out on data, oh my God, here's the place for you. They've already gathered all the data. And you can just kind of have all kinds of fun with it if you want to.
And you can search by zip codes, you can search by a whole bunch of different
I
criteria.
mean, yeah, I mean, like I said, if you're a numbers person, you'll spend hours on this website.
Yeah.
Here you go, price drops, like interesting. So here's like an interesting thought, right? In 2022, in Howard County, so that's this graph, only 3% of the homes had a price drop in 2022. Today, it's up to 7%. So, it's interesting information. All by itself, it doesn't really mean anything. But if you start to say, well, days on market are increasing, as days on market increase, you're probably going to start to see price reductions. What does that mean? So, right, you can get into the weeds with the data if you want to. So back in January, houses were staying on the market an average of 55 days. Today, they're on the market an average of 23 days. So this is also great information to kind of combat or contrast what you hear in the national news. If they're like, oh my God, the housing bubble is upon us. But when you look at this kind of information, we're at the same point we are now. Days on market is 23 days. In 2022, when the market was like really zooming, it was at 14 days. So we're only on the average a week longer. And, Karen and I have been in the business long enough that in 2008, 2009, we took 12-month listings. We didn't take 2 or 3 month listings.
Yeah.
We told people you might get 1 or 2 showings a week for 12 months. And now it's just like if somebody doesn't sell their house in the first weekend, they're like, oh my God, what's wrong with my house? So when you have the data, you don't have to pay attention to the news because the news is only trying to fearmonger. That's just my opinion.
No, totally. And then, again, if you're looking, so when I started, I kind of tried to focus on neighborhoods, just like you, as somebody here asked, what neighborhood? So there are ways to figure out like, how many months of inventory are in each neighborhood and where do you focus more, where do you focus less? So this is really great information on Redfin.
Yeah. And I mean, as much as I appreciate that everyone, that you guys are here, definitely connect with, Facebook groups. There are plenty. I mean, I think I'm in like 7 different Maryland Facebook groups and a couple down here in North Carolina. Um, it's a great way to meet the people who are doing the deals, to find wholesalers that are wholesaling deals. Um, People will go on there. It's purely a fishing expedition, but they'll be like, who's buying in Howard County, right? And all these people post in the comments, I am, and they give their contact information. Well, great. Look what they've just done. All these people just raise their hands as possible buyers. Like, why not just go grab that information and create a buyer's list? Um,
Don't even ask the
but
question again, right? Because a lot of these people who ask are just selling leads, right? So they don't even have, the deals. They're not even wholesalers, but they're just selling leads. So
right,
you just look and see, somebody who's already asked and take the contact information.
Yeah. In fact, I usually will like save the post, and then, a day later I'll go back into the comments and kind of scrub for contact information. Um, so yeah. My point was, love that you guys are here, but there are plenty of other resources where you guys can kind of get connected and try to, maybe verify that what we're saying is accurate. Again, these are our opinions. Our opinions are based on, Jesus, 50 years of combined real estate experience. So we kind of, I think we combined have close to 1,000 transactions under our belts. So we kind of have a good idea of what's happening. And we both coached and mentored and managed, agents and investors. So we're doing this not because anyone's paying us to. We're doing this because we want to share the knowledge that we have.
Well, thank you.
And next month we'll meet in person. And, we tried this out, but it's better in person, I think, right?
It's 100% better in
It's
person.
different.
We're online because I couldn't be in Maryland today. I'm down in Charlotte. Um, it's interesting. I think there's some pros and cons, right? I
Yeah.
think part of it is the recording for sure is happening for those that have never been to our in-person meetings. We're our tech, our mics go out, the camera doesn't record, the sound doesn't record, like something always goes wrong. So here we know for sure it's been recorded. But there's something to be said for being in person and being able to kind of have a one-on-one conversation where you can actually look the person in their eyes. So we'll be back to that. As a point to that, we always meet the first Wednesday of the month. However, the first Wednesday of July is July 2nd. So we are not meeting on July 2nd. We're going to be meeting on July 9th. We'll update the meeting and meetup, but just, if you want to put it on your calendar or put a note in here, we're meeting on July 9th in Rockville instead of July 2nd. And then Dimitri, to your question, wow, dude, we can hardly record a meeting, let alone live stream a meeting. Like, I mean, we're going to have to figure, we can try, but I'm not going to promise anything.
Maybe through Zoom it'll work, right? Like we'll open up the Zoom in the.
I think what we'd have to do is we'd have to like have the one camera, recording us, and then do like an iPad that would be like live streaming on Facebook or something like that. Lisa's our tech person. We'll get her to figure it out for us.
Oh, she looks happy.
She does.
Just typing.
Thank you.
Do it as a Facebook Live, and we'll link it up with StreamYard to get the thing done. And then you said that, so yeah, we'll figure it out.
We'll figure it out. And you know what we'll do? We will. I would say we'll try to figure that out privately, with maybe just like 3 people on a Zoom, in a live stream, so that we can figure it out. So we're not doing it, and so we're not testing it in real time.
So I know
great.
that at work teams that even someone was talking during a presentation and they just put a camera there and it's recorded and we can hear their sound finally, when we're not there. So you can, I think Zoom could work the same too. You just need the camera pointed at you and it will record the sound and everything.
Yeah, I mean, and like I said, we'll definitely try that, and that's definitely something we want to do because, like Dimitri said, like Dimitri's from like south of the Beltway, and he made it to one of our meetings in person, but I think it took him like an hour and 45 minutes to get home, and like having it virtual for some and in present for the others is, eventually what we want to kind of do for everybody. So, but I think, it feels like if we don't stop talking, we're going to keep talking.
Yeah.
So, again, personally, just want to thank everyone for being here. Love the questions. I'm going to save the chat so I can kind of record all those questions that we had. tomorrow I will send out a little bit of a thank you. It'll probably have a link to the Zoom recording, and then talk about next meeting. So thank you.